Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic managing expectations. The results for the September quarter have begun to flow. We saw TCS. By the time you see this video, Infosys may also be out with the numbers, and a number of companies are going to come one after another giving out their September quarter numbers. Naturally, it's every investor's curiosity to first anticipate something from companies and then see what you anticipated came true. Sometimes you want to think that companies won't do well and you set your anticipation low, and when the numbers come out, you want to see whether you are right or the company has done better. What happens if the company has done better? You just accept that your judgment was not right, or the company exceeded your expectations, and then try to find out why the company exceeded your expectations or the company underperformed your expectations. Either ways, you try to evaluate what went on differently in the company that brought out numbers very different from what you anticipated. You then factor in your learnings into setting your expectations for the next quarter and beyond. So, the future needs to be viewed afresh, aligning all the learnings from the last quarter. By continuously doing this, your experience grows in expectation setting. Your ability to anticipate improves significantly because as you make mistakes and learn, you learn from your mistakes and you become better at setting your expectations. There is also the responsibility of identifying new opportunities in which you again learn to set expectations. When you learn about a company, you are not an expert on it. So, the first time you set expectations on that company may not be very accurate and you may be off the mark, but you still need to begin somewhere, and this quarter may be a very good time to do that because market is running very low on expectations. Results are being approached with a hint of nervousness and even boredom. And after the results come out, the disinterest of the market is surprising those who came into that result with positive expectations. When the market is not interested, they are also selling their stocks or not bothering too much about that company. Effectively, stock prices go down before the result and go further down after the result. That seems to be the trend as far as companies that have come out so far are concerned. But there will also be companies where we have set low expectations, and when the company exceeds it significantly, we are going to get excited. So, we are going to see the market buy the pop or expect the jump to be very, very ordinary and then be surprised by the extent of the jump post the result, or expect a modest fall but actually see a much sharper fall. Either ways, I believe the market will be very reactive when it sets expectations wrong. If it's favorable to what you think, you react more. If it is unfavorable, then you're going to be very, very disappointed and you're wondering what to do. So, this is going to be a result season where managing expectations needs to be much more sharper and correct. Investors who do this better will be able to manage their existing investments better, will be able to reset their expectations for the coming quarters more accurately, and will also be able to identify new opportunities from studying the results season. And from that study, they will set fresh expectations, which I believe have a better chance of coming true in the future rather than what we saw in the last quarter. The reason being, the last two quarters saw massive inflationary disruption of business economics, of unit economics, and companies also struggled to sell because markets got disrupted. And we also saw that the willingness to carry more inventory has been coming down progressively over the past few months. So effectively, companies have struggled to grow sales, and in that struggle, they have also had to cede profitability, and that makes it very difficult to set expectations going forward because you're not sure whether they will continue to do the same thing or things will change for the better. That's where managing expectations and expectation setting is going to be tested. All your experience will have to be brought into play so that you do a better job of managing your expectations and setting fresh expectations where you're looking at new ideas. Both these things have to be done well so that your existing investments continue to be in your portfolio serving you well, and you're also able to bring in some freshness into your portfolio by identifying new opportunities which you will buy into once you're sure about what to expect from those companies. All this will give you an opportunity to refresh your portfolio and then create more life in your portfolio that will deliver superior investment performance going forward. Thank you for watching this video.